Hey, folks, welcome to Financial Fitness, and I'm your host, Patrick. As always, folks, we are here to give you a little bit of insight in regards to the overall general market, where to maybe think of putting your money, how to play the market, and maybe a little politics as we go through it. So let's jump right into here. So obviously, folks, the United States, as I say the Western society, avoided a governmental shutdown over the weekend with House Speaker McCarthy being able to manage and kind of push his way through his Republican Party and come up with an agreement. What's this going to mean for the market? Well, today, we're looking at the early morning trading hours here. We've seen the market pull back a little bit. I don't anticipate that. I think that we will see a rally. And the reason for that is that if the government avoids a shutdown, the plunge protection remains. And what do I mean by that? When we look at financial institutions, the Fed, managed by Jerome Powell, they will step in and they will buy equities if the market tends to pull back. Where we are right now is that we are at a very pivotal moment in the market. We have inflation continuing to rise, even though they're not telling you that. We'll take a look at the charts here in a little bit, but we're seeing bond yields continuing to rise. We're seeing the dollar continuing to rise. And most importantly, energy costs. Oil, you got to think about it this way, folks, is that oil and gasoline goes into every vehicle, every truck, anything that is delivering a product to your door. Whether it's Amazon, those drivers need gas. Whether it's your food to the shopping center, those trucks needs diesel. Oil is such a commodity that runs our lives. And we're seeing the CPI, which is the Consumer Price Index, ticking up again gradually. We have core, which is taking all of these things, a basket of goods that the federal government looks at and says, has the price of this bread, has the price of this pencil, has the price of this suit, has it continued to ratchet up? They're continuing to ratchet up. The big things that are hindering right now are our mortgages, so our rent equivalent mortgages or lease equivalent mortgages when it comes to rent, and our energy costs. We're in the summer, right? All of you folks around, and we just got home from San Antonio, Texas on a bit of a business trip. You guys are running your air conditioners nonstop. How is that affecting energy prices? Well, they're continuing to rise. We are now in a situation where energy is costing people a lot of money and continuing to rise. What do we do? Let's jump into the charts here for a second here, folks, and we'll take a little bit better look. Where we are right now, this is the QQQ. So this is the NASDAQ. You're seeing this as a live ticker. This is over since 2020. You can see the big COVID drop right above my finger here. And now we've rallied off of that ever since. But look at that volatility. So that volatility, daily, weekly, is showing me that there's lots of movement. We can make money on the way down. We can make money on the way up. But I think we're entering into, as you can see in the chart here, where we didn't get a second double top. We have a lower high on that second one. That's telling me that we are into a downward trend in our markets. Well, what is that? Is that a problem? Where do we go from here? All markets trend. They have ups, they have downs. They pull back, they have explosions. We just went through an AI revolution where all of these companies have invested what they're saying is lots of money and lots of energy into what's going to be generative artificial intelligence. Well, generative artificial intelligence sounds fantastic. It's great. It's not here today, though. Companies such as NVIDIA, such as Oracle, such as Microsoft are going to be the leaders in this. NVIDIA is a chip company. They're manufacturing products for all of the spaces. My problem is, who's buying it? When I look at the balance sheets of these big companies, I don't see a lot in the way of investment in this. So NVIDIA is a company that has ran up a couple 100% over the last couple of years in regards to this anticipation of generative AI. And there's a difference. We've had artificial intelligence for a long time. The concept that really blows this out of the water is the generative piece, the idea that it can work and think on its own. The problem is that it's transitioning. So when we go to this here, this area here on the chart, this has been the AI, I'm going to call it mania, right? This goes back to an over exuberance in regards to a straight up movement. When you go back over here from 2020, we printed trillions of dollars to stimulate this economy to this level, right? We shut everyone in. We're keeping everyone into their basement. You're locked down. And now we've had this massive run up stimulating the economy. Pull back. These are natural economic movements, consolidation, pull back, lower high, lower high, lower high, lower low, lower low, lower low. We're now seeing a higher high, a higher high. But what do we have here? This is a new break. My point here, folks, is this mania that we've had, I feel, is a situation that has to continue to push down and be rectified. When we see charts and they have a breakout like that, a massive push, you usually see that what's called gap fill. So that gap will become filled. And the reason that is that it's usually on speculation. The individuals that are buying that up, and I'm talking about these blue chip companies that everyone thought was, hey, this is the time. People are going to go back to, we're going back to the moon, right? Wasn't that the old additive during the GameStop revolution that we had with all the retail traders? What we're looking at now is we're looking likely to come back and fill this area down in here over the next few months. That would create, again, a topping high, a lower high. We have to create some lower lows, but that's going to create a new trend. Now, what do? How do you manage against this? For James and I, when we're talking about our finances and trading, we tend to trade leveraged ETFs. So ETFs are a basket fund that allow you to trade a number of different equities being stocks, right? So when we trade those, it allows us a bit of diversity. So when I trade the QQQ, which is the NASDAQ, that's an ETF. However, I'm a little bit more risky, and you have to know your own risk. I'm in a position where I can risk a little bit more. So I trade leveraged ETFs. So for instance, the TQQQ, which is a triple leveraged ETF, is following the NASDAQ, or where I am right now in following the SQQQ. That is a triple leveraged short QQQ NASDAQ ETF. So when I'm trading this allows me to be able to play the market on the up and or the down through these ETFs. Now, something about those you got to be aware of is there's a bit of decay. If you lose 1% either way on your bet and you gain 1% on the opposite side of that the next day, you have what's called decay, whereas it's not quite the full 1%. Understand? If you had a $100 ETF and it runs down to, and you lose 10%, say, and it runs down to $90, well, if you gain 10% the next day, you're not back to a full 100. You have decay. That makes sense, right? Now, the big things that are pushing the market today, when we take a look on the daily chart, let's pull that up. So this is the daily time frame. Let's take a 3-minute and we'll see what's happening for the day itself. Again, we're getting this volatility. It's showing that it's having trouble. It's in a range-bound pattern. This is creating range here. However, you had a massive breakout. This structure of buying is telling me this is all algorithmic. This go style buying is big hedge funds pushing up. The immediate flush down is telling me that there are no buyers here. There's no real buyers in this position. So what happens? We flush down. Why is there no buyers? Let's look at the bigger picture here. We have the dollar. This is the US dollar, and this is a fund that follows the US dollar. And where we are right now is we are continuing to make all-time highs. Well, recently all-time highs in regards to the price of the dollar. And what happens when we do that? Well, you got to think about it. 35 to 45% of the United States trade is done with other nations, right? Other nations other than itself. So if there's a very strong dollar, say you're buying something here in Canada, our dollar doesn't go quite as far to an American dollar if it's really strong. So what happens is that you've got a crush on profitability. So when these companies go into their balance sheet at the end of the year and they have less and less and less foreign dollars being transferred into American dollars, you have this process of profit crunch. That's not what investors want to see. So therefore investors pull out. So that's the first side. That's what we're dealing with now. We are dealing with a dollar that is strengthening. Let's go to a 1 day and you can get an overall feeling of where the dollar is on a grander scale, right? So this is basically the year, volatile movements, but we have had a straight up since, the middle of July, all the way up. And we're continuing. This is an all-time high for the year and we'll continue. The next one is yields. What is this? Doesn't even look that different, does it? But we just went to the 10-year bond yield. And what is bonds? Bonds are debt. Bonds are the avenue for individuals to purchase, whether it be sovereign debt, whether it be the national debt of your country, or debt from an organization or company. So bond yields as they ratchet up higher, what that is people don't want your bonds. So they've got to give them more incentive to buy. So what that's telling the world is that the United States debt is not wanted. Well, that's a problem. When the US, especially when you look at where we are, where we almost shut down the government here last week, and wherever you land on that politically, that's, between you and yourself. But if you're concerned about a government shutdown and you're buying from Japan and you're thinking, hey, how do I go into the greatest nation, the strongest nation, the military-backed nation in the world? Well, they're not doing that anymore. So as yields go up, borrowing gets more and more expensive. When borrowing gets more expensive, that crushes profitability on the backside as well. So what we're doing here is we have multiple threats. We have inflation still rising. We have the dollar rising. We have yields rising. And as I was saying, we have watched oil. This is now oil, West Texas Intermediate crude. This is the price of oil over the last year, where we've had range and then breakthroughs. These are all problematic things. We have to get this under control, or it's going to be problematic. But my guest today, this week on Financial Fitness, is she's got an interesting plan and how she works with individuals to guarantee their incomes for the next years or the entirety of their life, to make sure that they have wealth for their entire families. From me, folks, stick around and we'll chat with her. Let's make some money together. Hey, folks. We're here with Jody Lamb tonight from Arcadia Settlements, and Jody focuses on helping people after they have struggled in an injury, whether it be through a car accident, whether it be a slip and fall incident, those sorts of litigious processes. Her and her organization, Arcadia Settlements, an international organization, once you have your settlement, is able to structure an annuity that is making sure that you're taken care of, yourself, your family's taken care of for the rest of your days. Jody's joining us all the way from Dallas, Texas. And Jody, welcome. Thank you so much for joining us tonight. How are you today?
I'm doing great. Thank you so much for having me, Patrick.
Great. Well, it's a pleasure to have you. So Jody, maybe you can tell us a little bit about, first of all, what a structured settlement is and how an annuity would potentially break into that.
Absolutely. So a structured settlement is an alternative to a cash settlement. A claim may be filed, like you mentioned, for an auto accident, an accident at work, maybe a slip and fall. Someone has an injury that is going to be compensated by the at-fault party. As they're negotiating their personal injury settlement, there's an opportunity to settle for all cash or for cash and future payments. The latter is a structured settlement, and that's where we come in. We help injured parties evaluate what those options are, which include tax-free, guaranteed future payments that are customized to meet their unique needs.
Well, so first of all, Jody, you're really doing some interesting work there when you're dealing with people that have been injured. So you're going into the individuals' homes, negotiating with them and finding out what their needs are, doing an assessment, and then working with them around the structured portion. How do you figure out exactly how much money that they would be having, and how are you able to put that into a volatile marketplace the way that we are right now? What does that structure look like on your underwriting, and how does that work?
I mean, every single case is going to be different. Every claim is different. Every individual is different. Every opportunity that we have to work with attorneys, injured parties, defendants, insurance companies, people that are negotiating during this settlement, we come in and we help evaluate options. So they may know, for example, that someone's not going to be able to return to work, or they might have reduced work capacity and earning limitations. In those situations, we can identify what the present value cost is going to be of those future expenses, help provide financial peace of mind and security, and provide a fixed annuity option that guarantees what those payments are. So regardless what happens in the market, it can go up, it can go down. It's not going to change their payments. So that guaranteed income that they need to be able to take care of their family, keep a roof over their head, the basic needs, we have conversations to discuss what they need and how we can help customize a settlement option to meet those needs. So it gives them that financial independence and security after their settlement that they may question if they're going to have at the time of negotiations. Someone can offer you $1 million, but let's be honest, most people don't know how to quantify what $1 million would mean and how that would impact their life. Sure, we've got big dreams and goals, but in reality, we know what our mortgage costs. We know what our expenses are every month. Being able to break that down into a monthly amount and being able to show that it's going to be guaranteed, tax-free, regardless of what the market does, is how we help injured parties move forward after their accident and after their settlement.
Well, you said a mouthful there. You said a mouthful there, Jody. You were talking in there in regards, but irregardless of what the market does. And as you folks know at home, we're looking at a market right now that is up and down. We're seeing the NASDAQ, the S&P 500. These markets are seeing, over this artificial intelligence boom, as people are calling it, a 25 to 30% run up in the last 6 months. We've seen a minor pullback here. But how does a structured settlement, how does the annuity that you folks offer at Arcadia Settlements, how are you folks able to protect against a catastrophic financial issue and maybe a recession, a depression? Who knows what some of these settlements are hedging against? How do you folks underwrite that deal? What does that look like? Is there variable? What is the risk to the individual themselves?
Well, I guess it depends on the type of structured settlement that you're looking at. There are the fixed and guaranteed structures that we settle at the time of the claim resolution, and those terms are spelled out. They know exactly how much they're going to receive, how long it's going to be paid, and when the benefits are going to start. We set up direct deposits. They don't even have to go look for the check in the mail. As far as underwriting goes, it's Arcadia's position as a broker to step in and help be the communication bridge between the injured party, the attorneys, the insurance companies, or the defendant settling the claim, and the underwriting annuity issuers and assignment companies that receive those future payment obligations. They're the ones that do the underwriting. They're companies you've heard of: Pacific Life, New York Life, Berkshire Hathaway, USAA. There's a handful of companies that we use, all AM Best, A+, higher rated companies that have that financial guarantee, years of market investment, hedge calculations that behind the scenes, they do all that magic. What they provide to us are fixed and guaranteed annuity pricing. They get a contract. The injured party never has to question what their payment is going to be. But for the people that want the more advantageous growth opportunity, or might be a little bit more confident in market investments, or they want better return than a fixed and guaranteed annuity, which right now it's the rate of return, the tax equivalent yield of a structured settlement is up to and over 8% on guaranteed fixed payments. And we can guarantee that for life. We can guarantee it for 20 years. Every duration, every plan's a little bit different. But if they want more of a market-based option, there's options to blend it with S&P 500 riders, or to include it into a Vanguard fund where they can get a little bit more market exposure. And while we don't know what the exact amount is going to be, it's specifically designed to have a 20-year minimum life cycle, so that when the markets go up and down, the calculation for how those benefits are going to be paid are known at the time of settlement. But if stretched out over 20 years, it's going to ride out the ebbs and flows. So we help counter the fixed and guaranteed, the absolute needs people need, and don't have the tolerance for the risk volatility, ups and downs of benefit streams. Complement that with market-based investments, and it is a unique custom plan every single case.
Well, it sounds like you folks certainly are putting your customers first. And we've seen a big movement out of the equities markets, away from a lot of the stock purchasing over the last little while, and into more of the bond market. And I'm 37 years old. If you were to tell me 10 years ago that the bond market was going to be the rocket ship for your personal finances, I would have laughed at you a long time ago. And this is where we are right now. And it seems like, for what you folks are doing, the bond option with a little sprinkle of, like you were saying with the Vanguard funds, those ETF options are allowing your customers to be able to maximize that. So when a customer comes to you, you do an assessment, you see what their needs are. Now you're dealing with their lawyers at this time. How are you garnering your clientele? And then what does your process look like?
Well, we have a lot of referral business. We work with attorneys, we work with insurance companies. They have seen us in action. And you're right, we work for the injured party, regardless of what side of the table that we come to, because we're a third party. We don't have any interest in the negotiations. We're here to help maximize and increase the total settlement for these injured parties. It could be for a wrongful death, it could be for heirs, it could be for children, adults. We can customize those plans accordingly. And we just continue to get repeat business from that, as well as sharing this information across channels like this, with sharing information that doesn't typically exist in regular conversation. You know, when you look at the television, you're not hearing a lot of information about structured settlements. You might think you are, because it is a derivative conversation, what happens after the claim settles. But what we do is we create that financial peace of mind, the security, the customized payments to meet their unique needs. We're talking about people that have had catastrophic injuries. They might have a lifetime of medical needs, future surgeries. We're protecting injured parties' children who can't even take receipt of the money until they turn 18. The alternatives of a block savings account or deposit with the registry of the court, which are the alternatives that the courts typically will approve to, making sure that the money is there for the kids when they turn 18 or 21, whatever the state of jurisdiction of age of majority may be. The parents get to help that child learn how to manage money. It's not one big payment. It could be, but typically we spread out payments once they turn 18 or older, and they have money to help them through college, down payments for their home, future medical needs, a lifetime of income. You know, this applies to kids as well as adults. There's no early withdrawal penalties. You don't have typical customary challenges that you might find in traditional retail space, not only with the guaranteed tax-free future payments, but also in the customize of the benefits. So for example, you don't have the restrictions to hold money until you're 59 and a half in our annuities. You can defer payments beyond a year without penalty. You can customize with multiple benefit streams. You can have lump sum payments. You can have quarterly, monthly, annual payments. We can have payments that increase by a set percentage every year to help offset inflation, put a cost of living adjustment rider in there. Every plan is unique and custom. So as far as other opportunities to help people, it comes into sharing this information on social media, such as LinkedIn. That's been a platform that I've leaned into this year and last, and continue to share that information and encourage people to pause when they are negotiating their settlement to evaluate this option. Because let's be honest, at the end of the day, when you have settled your claim, or that final decision to settle your claim, you're tired. You've had years of injuries, recoveries, the emotional ups and downs that comes with that, the financial strains that come with not being able to work, worrying about taking care of your family. We offer a solution that can ease that burden after the settlement. But it's a lot of information to take in, and being able to have that conversation with people prior to the settlement is our best way to be able to help provide the information and let them make the decision that's best for them.
Absolutely. And, you know, obviously, first of all, you're very passionate about what you're doing here. You can tell that you just kind of light up when you tell these stories. And obviously, working with Arcadia Settlements the way that you have. But one little piece really struck me. And I know for myself, every year when that tax man comes around, I hate them. So there were some things there that you brought up in regards to, you know, tax free. Can you tell us a little bit about why these structured settlements and the way that you folks have done them are tax free and the benefits of that? Because I'm telling you right now, if I'm in a situation where I'm earning income and I'm not paying 50+% of my income, that is a darn good day in my world.
And that option exists for attorneys when they're settling these cases too. That 50% is right, pretty much close spot on the money there. Rather than take that 50% haircut, paying taxes when they receive that, income from their client settlement, they too can structure their fees. So the attorneys get the benefit of tax deferred benefits. So they invest 100% of their income, and then they customize when they're going to receive those payments. As for the injured party, they're never going to pay taxes on interest, dividends, capital gains. There's no ongoing costs with the fixed and guaranteed annuities. There's no maintenance. There's no ongoing management that needs to be done. This is a set it and forget it type of solution for people settling their claim.
I think it's a fantastic process. And like I said, you folks have all obviously done a fantastic job in building this, underwriting this, and making sure that these people are going to have something for them and their families in the future. How does that look like after someone passes away? Is there a legacy involved in these? For instance, myself, I'm 37 years old. I have a lovely daughter who just turned 14 years old. If something happened to me tomorrow and I went in and we were in a situation to structure something like this, how is that legacy wealth passed on? Or is it? Or what can you structure?
Great question. And building on the conversation or the last question that I didn't really have a chance to fully articulate, with the IRS, for example, the tax code will allow for a personal injury settlement to be paid tax-free. So if you're settling your claim, you're going to receive your settlement. You're not going to owe any taxes on it. Once you take that settlement, you may invest it. You may try to manage your own money, and any growth that you have is going to be taxable.
Right.
Whereas the tax code is such that if your settlement includes cash and the future payments, those future payments are also tax-free, including the growth. Now, you may choose an income or a benefit stream that is into the future. And if something were to happen to you before those payments are to be, before you receive them, you'll name a beneficiary. Your daughter can be the recipient of those future payments. Those benefits carry forward tax-free. There is commutation opportunities. So if there's estate planning considerations and they need to have a large amount or a percentage of the future payments commuted to present value, that option exists at time of settlement. Again, these terms are identified when the claim is being settled. They're written into a contract, and you're given they're written into the release, and then you're given a contract of those future payment promises.
Who is dictating a lot of these terms at the time? Like, obviously this is a negotiation process, but who is involved? So you have the injured party, you have their attorneys, you have the how's the best way to put it? The at-fault party, mm-hmm. and their attorney or insurance company. So the terms of release of funds are negotiated by who? Because I imagine the individual receiving the funds is the one that is strictly doing this process.
Now, Canada and US have slightly different processes. I'm going to speak to the US for us.
Sure.
In the US, all the parties are going to come to the table. They're negotiating what the settlement is going to be, and all they have to bring to the table is money.
Right.
Now, what that final number is going to be is somewhat out of our control. Now, we can help have conversations to help them understand what that money could do for them. Ideally, we know what their future needs are, and we can say, this is what it's going to cost to replace my income or to have this future surgery. And to be able to come to the table and have those conversations, we have preliminary conversations we have preliminary consideration for how that money could help. But the negotiated term of being able to settle for cash and future payments is what comes to the table with both parties. It cannot be unilaterally done, in that the insurance company or the at-fault party can't force someone to receive a structure. That's like telling you that you have to wait until you get to retirement to be compensated for your dog bite claim.
Right.
Well, the injured party can't say, well, the insurance company has to pay me in the future. This is a negotiated term. So both parties come to the agreement. It's written into the release. And then the benefit streams are usually dictated by the injured party, the party who's receiving the payments, because, their unique needs need those payments for different various reasons. And that's what we're here to listen to. We're here to find out what their worries are, what their concerns are, because often that's a barrier to settlement. If we can offer solutions and come to the table with opportunities that give them the peace of mind that after their settlement, they don't have to worry about how they're going to have, their mortgage paid or medical expenses covered. It gives them that peace of mind so that we can get the case settled.
Yep.
And that's the goal of everybody.
Absolutely. And you're dealing with insurance companies that are understanding that, by dealing with this now, setting up a payment process that is taking advantage of compounding interest, they're in a position where they're able to structure this immediately, get it off their books, and move on and continue the writing process. So, Jody, Ms. Lamb, I want to thank you so much. It was a pleasure having you tonight. How do people get in touch with you? And when they need you, who do they call?
They call their structured settlement expert. We are here to help people understand, and we have no charge for our services. I can be found on LinkedIn. I post daily. I can also be found on LinkedIn under Structure Your Future. My direct dial number, if you want to call me in the office, 480-253-3761. If you have a case that you want to talk about, we can evaluate what those options are, give you the information, and let you make that choice. I'm pretty low pressure. I'm really an advocate of education. This is a huge financial decision for people. And much like my own finances, anytime I make a big financial decision, I want to go in with the most information possible. So information that you're sharing, Patrick, is important. Knowing what's happening with the volatility of the market, knowing what my end goal is going to be and how I'm going to be impacted in my other financial components of my life. That's what we evaluate. Structured settlement may not be right for everyone, but it is a great tool to mitigate taxes, to be able to maximize settlement dollars, and to have a life of future independence, financial security, and peace of mind.
Absolutely, Jody. Well said. And again, thank you so much for joining us. For me, folks, as always, let's make some money together, folks.